The Bank of Canada says the country's stuck in a vicious circle of low productivity and goes on to suggest how we deal with this. But let's start with that statement with Eric Lascelles, chief economist at RBC Global Asset Management. Thanks for joining us today.
My pleasure.
Would you agree with that remark? And if so, how did we get there?
Certainly, Canada has a big productivity problem. I think that's beyond dispute. It's been underperforming the U.S. for decades. It's been underperforming peers in recent decades, and it really just haven't moved forward very much in recent years. So there is absolutely a productivity problem. I think you hear it described a little bit less frequently as a vicious circle, but it is in the sense that when productivity growth is low, it just means that money isn't flowing into your and my pockets and into the government coffers and so on. And so there's a limited ability to reinvest. The government has trouble affording the infrastructure and the other things that would make us even more productive in the future. And so something is really being limited there. And gosh, I mean, the consequences, of course, extend to just the financial well-being of Canadians. But equally, the central bank takes an interest, not just because that's of a societal interest, but also because, as an example, you can run an economy hotter. It can run faster without inflation overheating when you have good productivity growth. And the Bank of Canada would love that. They could keep interest rates lower and so on. And that's just not been possible in recent years. And indeed in recent decades.
Okay, we've heard lots of business organizations and business leaders say the red tape in Canada is far too thick, and this process to get anything done takes far too long. How big of a problem is this to the productivity issue we speak of?
You know, I think it is a multifaceted issue. And so the Bank of Canada did raise a number of very valid points. And they did start with, as you mentioned, the regulatory environment. And I think we often leap to tax rates. And I'm sure, there is improvement possible on the tax rate front. But the more acute element is that red tape and just the fact that it's so difficult to make that next investment or to engage in that next project. And of course, we've seen some efforts in the recent budget perhaps to start to ameliorate that. But probably that's the bigger issue even than tax rates and that sort of thing. Beyond that, though, Bank of Canada also flagged a lot of sectors in Canada are quite concentrated. And so you look at telecom or financial services or some others, and it's just not very many large incumbents, and it's hard for smaller businesses to get in. They also mentioned too many small businesses, not in the sense that small businesses are bad, but in the sense that there aren't enough of them that are then getting big and attaining scale. And so some related to the structure of the economy as well. I would add some other things. I would say, to me, it's even broader than that. I think there is just a culture of risk aversion and perhaps a bit of complacency in general. I think it's fair to say that Canada does have a probably somewhat just challenging economic structure. It's just a big country. It's not a big population. There's not a high level of scale. There's been a lot of money in recent decades that's gone into housing because housing has been so expensive that might have been better, more productively deployed in other directions. Research shows that expensive housing markets tend to be low productivity environments, and Canada's suffering from a bit of that. And we have things like seasonal industries and fisheries and so on, where it's hard to deploy workers efficiently right across the year. And so it is a real mix of things. The challenge is there are so many things that you could fix. The opportunity is you just start whittling away on any of a number of fronts. And I do think we're starting to see a little bit of that, at least.
Okay, you referred to the budget. Is the Major Projects Office going to help with at least some of that?
I think you can argue it should help. And so what's interesting to me about that budget is it actually includes surprisingly little government CapEx. And so that would be sort of one thing you would look for. It certainly goes up. There is a material amount, but it doesn't go up by as much as people might think. The bigger push there seems to be in the bill passed over the summer, which simply reduces that red tape for big projects. The Major Projects Office, as you say, that's, I suppose, meant to help usher big projects forward. They did do some accelerated depreciation that functionally does make it more attractive to invest in capital. So I think there is important progress happening there. I would say don't underestimate some other things. As an example, Canada had that big immigration surge, and it seemed to, just because it was so incredibly powerful all at once, it did seem to dim Canadian productivity. And so as that has faded, there is some opportunity perhaps to get that going a little bit again. The pandemic probably did some distortions as well. And as we see people returning to the office more, the research would seem to suggest there might be a little bit of a productivity pickup that comes from that. I think we're crossing our fingers that perhaps a USMCA trade deal can get done done at some point over the next 6 months or so, and that can remove a pretty significant source of uncertainty that's perhaps been prompting businesses to sit on their hands as well. And as I said, the government taking some steps too. And so I think we can talk about productivity growth picking up somewhat in Canada, but I really wouldn't want to downplay one last thing, which is businesses themselves have been quite complacent. You look at measures of capex per worker in Canada, they are at best about half what the U.S. equivalent level is. And you might think, well, they've got the big tech sector. We don't have that. Maybe there's some sectoral distortions. We've actually done research controlling for sectors, and it's even worse. Canadian businesses just are not investing on that basis. They're not doing research and development. You can pin some of the blame back to the tax rates and a few other things, but I do think there is sort of a failure to think big on the part of Canadian businesses as well, and that's an open question whether we can get that fixed.
Will AI be able to help us get out of the cycle at all?
I think so. And so that's the big question globally at this point. Is that the next general purpose technology that can be a tailwind for global prosperity? It's certainly not unique to Canada. We are penciling in faster productivity growth over the next few decades right around the world from AI. We don't know how much we should be penciling in. It could be a little bit. It could be a profound thing that just upends the world, and that's not clear. I would say, of course, that also brings with it potential complications. And one of the questions is the extent to which labor might be somewhat displaced by this extra AI and whether that creates a different set of headaches for the government to deal with.
All right, Eric, I'm going to leave it there. I'm out of time, but appreciate your time. Thanks for that.
Thank you.